Chief Economic Advisor Krishnamurthy Subramanian has really worked incredibly hard to put this survey together and provide so much information. Whether you agree with it or not, it's full of information. It covers a lot of ground, and fortunately today we have some of the best minds to go through it and the main highlights of it and tell us what's in it that's good, what's bad, and what's ugly in our economy today. So we've got an entire team of panelists, but first let's go in straight, because we don't have much time, into the first important aspect of the economic survey. You'd say it's almost an overview, which it starts off with, and Mr. Subramaniam paid a lot of attention in his press conference today on this. And this is what it is. This is what basically the economic survey first talks. If you look at the graphics highlighting the main aspects of the survey, you'll find that it talks about India's response to the pandemic. First, it says there was a swift and effective lockdown. Now, on that, I think we all agree it was very swift, 4 days after decision, and I think we have been through this in many of our telethons to show that it was an effective lockdown. It really did flatten the curve. It also, did it have it saved lives, did it save livelihoods? We'll come to that. It also says it was a humane lockdown. And basically it says it's humane because it focused on lives rather than livelihoods, because the economy can bounce back, but lives that are lost cannot be recovered. I think there's one huge area, if you ask me, and we've focused on this before, but by calling it humane and not mentioning, or I didn't see it very often mentioned, the migrant problem, the migrants that went through torture during that lockdown, humane may have not been the right word. And finally it talks about expect a V-shaped economic recovery. You know what it means by V-shape? It goes down sharply and then will rise sharply. And let's have a look at what it's suggesting. It's suggesting that the economy will go down by about, let's have a look, a V-shape. If you look at that's the 2009, and we just hold it there, the 2009 level of GDP, and it'll go down 7.7%. The IMF is saying 8, but that's the same thing. And then it'll go up by between 10 and 12%. So say 11, 11.5. Now that will actually mean, because that 11% is on a lower base, after 2 years, the Indian economy will be 2.5% above what it was in 2019. That means it's going up at about 1.2% a year on average. Now how does that compare with other emerging markets? We are normally ahead, but we'll be behind emerging markets at the beginning of 2022, because developing economies generally have dropped only 2.4% compared to our minus 7.7%. On average, they've dropped 2.4%. And by the way, that includes India, so it'll be even less than that. And they're bouncing back, but not as much as India. They're bouncing back by 6.3%. So on a lower base, but not as low as India, they will go up. They'll be about 3.75 to 4% above 2019. That is, significantly higher than NDTV 3.75 compared to 2.5. That is a worry for India. Now, if we can get Dorab straight away to talk about this. Dorab, in terms of the pressure on the economy, it's a little worrying that we dropped by 7.7%, and that will always take its toll in the long run, won't it?
The first quarter we had a world record. We went down almost 24%. It's very difficult to recover from a drop that's so enormous. So I think, frankly, 7.5% isn't that bad, seeing how terrible we were in the first quarter. So I think we got to be grateful that we're down only 7 points, 7.5 points. But it's a bad,
Right.
But don't forget also, we've been not growing very well in the last few years already. I mean, we were already down to 5.5. I don't think we've grown at 7 since the first quarter of 17-18. So we were slowing down. This pushed us down. Now, hopefully, we'll push up back a little.
So let me ask Yamini. Yamini, is it reasonable to assess an 11% recovery? Even the IMF tends to agree. So would you agree with that? And what's your overall response to this general theme that we had a positive, good response? The government handled the pandemic very well, and it was humane as well.
So I think, as you said, this is economic survey that has been written against the backdrop of what is a very trying time for the Indian economy, and has been a very trying time for the Indian people. And we are all looking to our government and our policymakers to understand in all its fullness the implications of what has happened over these last 10 months, and with a lot of hope for what the future holds. I think in that context, an honest assessment of these last 10 months is important. No doubt our lockdown was swift. No doubt it was effective in the sense that, particularly for the first 21 to 30 days, the country was closed down. There was a complete freeze on much of the economy, and most of us were kept in our homes, with the police using various coercive measures to ensure that we followed the norms of the lockdown. But the consequences of that, when you freeze an economy in the name of saving lives, for an economy where the bulk of its people are employed in the informal sector and largely daily and casual work labor, you have to ask what saving lives means. And I think that that's the fundamental question that we hadn't asked at the start of the lockdown. And the migrant crisis was a very, very visible consequence of that. The fact that the lockdown has, if you look at labor market data closely, actually further pushed the economy into informality. And the fact that even though we are in fact seeing some degree of economic recovery, and perhaps it is likely that the GDP will grow by 11.5% as has been projected, and it's very important for us to have a pathway. And I would really like to compliment the Chief Economic Advisor for providing us with an understanding of what is going to happen in the course of the economy over the next 2.5 years. That's an important basis on which to understand the kinds of fiscal policies and monetary policies the government is going to come up with. But it is important to recognize also that growth right now is being fueled largely by profits. Small firms and the informal sector is still hurting. Jobs have not recovered, and incomes have dropped significantly.